Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
So you can see market has confirmed our some doubts that we announced and discussed yesterday. Then indeed our prediction has continued, because through this week, day by day, there's more and more bullish signs were appearing. As well, actually in the beginning of the week, it was looking like just a pullback to the major resistance. Even rubber has been formed, if you remember here. So on the first day, we thought that probably will be the pullback before downward action, but while market stands here flat the next session, and especially yesterday when it's confirmed our suggestion, and indeed has shown the upward action, the situation on the intraday chart was changing, and we have covered this in our daily updates. So even on this session we said, well, stay aside from the bearish positions. You probably even could try to go along with the reverse hand short pattern that we have on the forward time frame chart. And currently, as you can see, market has come to the next resistance area. Euro currency as well has confirmed again that the relation to the stock market. So probably those of you who are tracking the stock market, you will see that some reversal started as on the DAX index in Europe, as in the S&P. So market has reached a strong agreement resistance on the weekly chart, and that has triggered the pullback. That in turn supports the domestic currencies. So you can see Euro currency starts rising as the stocks market has turned down. This is normal relation between the stocks and the currency. So, well, currently we have the bullish context, and we do not see good stops for taking the short position, despite that bearish context has not broken yet totally. And as we said yesterday, everything will depend on 110 area. Also, you can see the markings that we keep since the weekly report, because we said, well, guys, this C point will be the vital point for bearish context. If market will take it out, we should be ready for upward action back to somewhere to this top. So this will be significant upward action in the euro currency, I suppose. In this case, we will consider absolutely different extensions, different targets and patterns. But currently, market's coming to the level. What we could do around this area? So first of all, we should take into consideration that we had that resistance in today's Friday. Today, guys, we will not get the non-farm payrolls release, because, as you know, when the NFP data stands at the first working day of the month, it postpones to the next week. So, for example, if Friday, the first of the month, the first date of the month, as today, the non-farm payrolls release postpones on the next week. So today we will get some data, but it's secondary data, and I suppose this will not be significant volatility on the market. Investors probably could well, start preparation to the weekend. Today is also the holidays in Europe, because it's of the Labor Day. Well, market will be relatively thin, well, hardly will get the breakout. It means that if we'll take a look at the forward time frame chart, here's the hand and shoulders pattern that we discussed yesterday, and greater ABCD pattern with our OP target creates an agreement with the daily resistance. So currently we're at agreement resistance on the daily chart. That's actually the pattern that we discussed yesterday on our chart. We call this picture, you probably remember this. Well, because on the forward time frame chart we initially talked about the minor A, B, C bottom, and so OP was standing right here. The butterfly also has been formed, and we said if market will break it up, it will go to OP of the larger pattern. That has happened. XOP stands 110.80 approximately. But today, I suppose the more probable action is the hitting of this target, because you can see OP hasn't been quite reached for a few pips. Market hasn't tested it, and then we could get the pullback. Well, upward action could be finalized by the minor butterfly, So that will let us to complete the OP, show some minor spike up. And then we could get the pullback. I suggest that euro should not drop below than these two levels, 109.20, the first fib level. More probable this probably will be to the 1 or 9 even. So if you remember, this was confidence and has been broken with this straight up action. Now this is another confidence support. And that's the level that's potentially suitable for taking the position, because here as we get the acceleration right to the OP, with the 30% pullback, market has good chance to proceed higher to the XOP. And also we have the support from the stock market. So currently I think that euro should keep this bullish context. And let's see what will happen around this area. If somehow euro will break this area to the downside and return back to the consolidation of the hand and shoulders pattern, in this case, it will be bearish sign, and in this case the bullish setup will stand under question. So this should not happen. That's why this area is very important, and that's simultaneously the culmination point for possible taking the long position, because here you could place as close stops as possible wherever you will take the position, because they will be just below this area. So that's in 2 words our view on euro currency.